Welcome to Questioning the Manager. Today we are joined by Mikke Kerley, Fund Manager of Henderson Far East Limited. Thank you for joining us, Mike. Asia is looking pretty attractive again on the back of a strong 2017. How has the first 3 months of 2018 been for the region and for the Trust?
Yeah, the first 3 months have been okay. January was a very strong month, especially for China. We saw a lot of the Chinese banks rising 20–25% through January, so that was good for us. There was a bit of volatility, obviously, towards the end of January and into early February. So some of those gains we saw in January, there was a bit of a pullback in early February. And since then, it's kind of been flattish. I think that the underlying trends for Asia are still positive, and we've seen that, but market reaction hasn't been as broad-based positive as we saw really towards the end of last year. Within the Trust, the portfolio's kept pace with the market. Generally, China has helped us through that.
You spoke recently about Asia's changing growth story. Can you speak a little bit more about where you think the region's growth is going to come from over the next 5 to 10 years?
Yeah, I think we need to look at Asia a little bit differently from the way we have in the past. So in the past, Asia was seen as being very cyclical, very exposed to global trade and what was going on in the rest of the world. But I think domestic markets are becoming more and more important. So we need to be looking at companies that make the best of consumption trends across the region. And even within that, we can't now look at proxies, in my view. So if we like consumption in Asia, buying Unilever maybe isn't the way forward, because there are local companies and local brands that are closing the gap with what some of these multinational companies and gaining market share from them. So I think we need to look really at different ways to make money in Asia. And to my mind, it's the local companies and the local brands which will be the winners.
There's been quite a lot of negativity towards China in the press recently, particularly after their president Xi Jinping was re-elected without a term limit, meaning he could lead the country indefinitely. At the end of February, you had almost 1/3 of the portfolio invested in China. So I'd like to know, are you worried about this negative sentiment? Do you plan on changing the mix of the portfolio as a result?
Yes, we do have 1/3 of the portfolio. I mean, to us, it's still the best combination of value and income growth in the region. And we still find plenty of opportunities. As far as Xi Jinping's leadership in perpetuity, if you like, I don't think it's a problem in the short term. He's very well respected. I think he probably stands head and shoulders above most politicians globally at this point in time in terms of credibility. But ultimately, I think when you have power being centralized like it is in China, there's a risk that power corrupts. We've seen it in the past. So I think in the longer term, I would say it's probably a negative. In the short term, we're probably shoring in probably one of the most respected leaders globally to push policies through, which I think most people accept are the way forward for China.
Mikke Kerley, thank you for your time.
Thank you.